Top 25 Junior Financial Analyst Interview Questions and Answers. A junior financial analyst plays an important role in supporting financial planning, analysis, and decision-making within an organization. This position requires strong analytical skills, attention to detail, knowledge of financial concepts, and the ability to interpret data accurately. Interviewers look for candidates who understand financial statements, can work with numbers confidently, communicate insights clearly, and adapt to a fast-paced business environment. Preparing well-structured and equally detailed answers helps demonstrate professionalism and readiness for the role. 1. Why do you want to work as a junior financial analyst? I want to work as a junior financial analyst because I enjoy analyzing data, understanding financial performance, and supporting informed business decisions. This role allows me to apply my academic knowledge in accounting, finance, and economics to real-world situations. I am motivated by the opportunity to learn from senior analysts and gain hands-on experience with financial models, budgeting, and forecasting. Working as a junior financial analyst will help me build a strong foundation for long-term career growth in finance. 2. What do you understand about the role of a junior financial analyst? A junior financial analyst supports senior analysts by collecting data, analyzing financial statements, preparing reports, and assisting with forecasts and budgets. The role involves monitoring financial performance, identifying trends, and helping management make informed decisions. Accuracy, attention to detail, and strong analytical skills are essential. Junior analysts also work with spreadsheets, financial software, and presentations. The role requires teamwork, continuous learning, and the ability to translate numerical data into meaningful financial insights. 3. What financial statements are you familiar with? I am familiar with the income statement, balance sheet, and cash flow statement. The income statement shows profitability over a period. The balance sheet reflects assets, liabilities, and equity at a point in time, and the cash flow statement tracks cash inflows and outflows. I understand how these statements are interconnected and how they are used to assess financial health, liquidity, and performance. Analyzing these statements helps identify trends and supports sound financial decision-making. 4. How do you analyze financial data? I analyze financial data by first ensuring accuracy and completeness of the information. I then use financial ratios, trend analysis, and comparisons with historical data or industry benchmarks. Organizing data in spreadsheets helps identify patterns and anomalies. I focus on understanding the underlying drivers behind the numbers rather than just the results. Clear documentation and visualization support effective communication of insights. A structured approach ensures reliable and meaningful financial analysis. 5. What financial ratios are you familiar with? I am familiar with liquidity ratios, such as a current ratio, profitability ratios like gross margin and net margin, leverage ratios such as debt to equity, and efficiency ratios like asset turnover. These ratios help assess a company's financial health, performance, and risk level. I understand how to interpret ratio trends over time and compare them to industry averages. Financial ratios are essential tools for evaluating business performance and supporting investment or management decisions. 6. How do you ensure accuracy in your financial work? I ensure accuracy by double-checking calculations, validating data sources, and following structured review processes. I use formulas carefully in spreadsheets and reconcile figures across different reports. Attention to detail is critical, so I avoid rushing and verify assumptions. If discrepancies arise, I investigate them thoroughly. Accurate financial analysis builds trust and supports sound decision-making, so I take responsibility for maintaining high standards of precision in all financial tasks. 7. How do you use Excel in financial analysis? I use Excel to organize data, perform calculations, create financial models, and generate reports. Functions such as VLOOKUP, if statements, pivot tables, and basic macros help improve efficiency. Excel is essential for budgeting, forecasting, and scenario analysis. I also use charts and tables to present insights clearly. Strong Excel skills allow me to analyze large data sets accurately and support effective financial planning and reporting processes. 8. What is budgeting and forecasting? Budgeting involves planning expected revenues and expenses for a specific period, while forecasting estimates future financial performance based on historical data and trends. Both processes help organizations allocate resources, control costs, and plan strategically. As a junior financial analyst, Supporting budgeting and forecasting requires data analysis, collaboration with departments, and regular updates. These tools help management anticipate challenges, set goals, and make informed financial decisions. 9. How do you handle large amounts of data? I handle large data sets by organizing information logically and using tools like Excel or financial software to manage it efficiently. Cleaning data and ensuring consistency is my first step. I then use filters, pivot tables, and formulas to summarize key insights. Breaking data into manageable sections helps prevent errors. A systematic approach ensures accuracy and allows me to focus on meaningful trends rather than being overwhelmed by volume. 10. How do you prioritize tasks when working on multiple projects? I prioritize tasks by understanding deadlines, urgency, and business impact. I create task lists, set timelines, and break projects into smaller steps. Clear communication with supervisors helps align priorities. Staying organized and adaptable allows me to manage multiple responsibilities effectively. Prioritization ensures that critical tasks are completed accurately and on time, which is essential in a fast-paced financial environment. 11. How do you communicate financial information to non-financial teams? I communicate financial information by simplifying complex concepts and using clear, concise language. Visual tools like charts and summaries help make data more understandable. I focus on explaining key insights and their impact on business decisions rather than technical details. Effective communication ensures stakeholders understand financial implications and can make informed choices. Tailoring explanations to the audience improves collaboration and decision-making. 12. How do you handle tight deadlines? I handle tight deadlines by planning ahead, staying organized, and maintaining focus. I prioritize essential tasks and avoid distractions. Clear communication with team members ensures alignment and support. If challenges arise, I address them early rather than waiting. Managing time effectively under pressure allows me to deliver accurate financial work on schedule while maintaining quality and professionalism. 13. How do you handle feedback from senior analysts or managers? I handle feedback positively and view it as an opportunity to improve. I listen carefully, ask clarifying questions, and apply suggestions to future work. Constructive feedback helps refine my analytical skills and understanding of business expectations. I value mentorship and believe continuous learning is essential for growth as a financial analyst. Applying feedback consistently improves performance and builds professional credibility. 14. What do you know about financial modeling? Financial modeling involves creating mathematical representations of a company's financial performance. Models are used for forecasting, valuation, and scenario analysis. I understand basic models, such as income statement projections, cash flow models, and sensitivity analysis. Accuracy, assumptions, and structure are critical. Financial modeling supports decision-making by estimating future outcomes and assessing financial risks and opportunities. 15. How do you ensure confidentiality of financial information? I ensure confidentiality by following company policies, limiting access to sensitive data, and using secure systems. I avoid sharing information with unauthorized individuals and handle documents responsibly. Protecting financial data maintains trust and compliance with regulations. Confidentiality is a key responsibility in finance, and I take it seriously to uphold ethical and professional standards. 16. How do you stay updated with financial trends and regulations? I stay updated by reading financial news, following market reports, and reviewing updates from regulatory bodies. I also participate in webinars, online courses, and professional forums. Continuous learning helps me understand changes in accounting standards, market conditions, and economic trends. Staying informed ensures accurate analysis and supports better financial decision-making in a constantly evolving business environment. 17. How do you perform variance analysis? Variance analysis involves comparing actual financial results with budgets or forecasts. I identify differences, analyze causes, and determine whether variances are favorable or unfavorable. Understanding underlying drivers, such as cost changes or revenue fluctuations, is important. Clear reporting of variances helps management take corrective actions. Variance analysis supports financial control and continuous performance improvement. 18. How do you work as part of finance team? I work as part of finance team by communicating clearly, meeting deadlines, and collaborating effectively with colleagues. I share accurate information, support team members when needed, and remain open to feedback. Respecting different viewpoints helps improve analysis quality and decision-making. Teamwork is essential in finance, as reports and insights often rely on shared data and coordinated efforts. By maintaining professionalism and cooperation, I contribute to a productive team environment and successful financial outcomes. 19. How do you handle errors in financial reports? When I identify an error in a financial report, I address it immediately and inform the appropriate supervisor. I review the data to understand the cause, correct the mistake accurately, and verify related figures to prevent recurrence. Transparency and accountability are essential in financial roles. Learning from errors improves processes and accuracy. Handling mistakes responsibly helps maintain trust, ensures reliable reporting, and supports informed decision-making across the organization. 20. What is your understanding of cost analysis? Cost analysis involves examining expenses to identify cost drivers, control spending, and improve profitability. It includes analyzing fixed and variable costs, comparing actual costs to budgets, and evaluating efficiency. Cost analysis supports pricing decisions, budgeting, and operational improvements. Understanding cost behavior helps management optimize resources and reduce unnecessary expenses. Accurate cost analysis provides valuable insights that contribute to better financial planning and long-term business sustainability. 21. How you handle stress in a fast-paced environment. I handle stress in a fast-paced environment by staying organized, prioritizing tasks, and maintaining focus. Breaking work into manageable steps helps reduce pressure and improve efficiency. I remain calm, communicate clearly with team members, and manage time effectively. Maintaining accuracy under pressure is essential in finance. By balancing workload and maintaining a positive mindset, I ensure consistent performance even during demanding periods. 22. What qualities make a good junior financial analyst? A good junior financial analyst is analytical, detail-oriented, and highly organized. Strong problem-solving and communication skills are essential for explaining financial insights clearly. Integrity and confidentiality are critical when handling sensitive data. A willingness to learn and adapt helps analysts grow professionally. Teamwork and time management support efficient workflows. These qualities enable a junior financial analyst to provide accurate analysis and meaningful support to business decision-makers. 23. How do you support decision-making through financial analysis? I support decision-making by providing accurate data, clear analysis, and objective insights. I evaluate financial performance, identify trends, and assess risks and opportunities. Presenting findings in a structured and understandable way helps management compare options effectively. Reliable financial analysis reduces uncertainty and supports strategic planning. By focusing on accuracy and relevance, I help decision-makers choose actions that align with organizational goals. 24. How do you manage repetitive financial tasks? I manage repetitive financial tasks by maintaining consistency, focus, and attention to detail. I follow established procedures to ensure accuracy and efficiency. Organizing tasks and using tools like spreadsheets helps reduce errors and save time. Even repetitive work requires careful review, as small mistakes can have significant impacts. Staying disciplined and systematic ensures reliable financial outputs and supports overall data integrity. 25. Where do you see yourself in 5 years as a financial analyst? In 5 years, I see myself as a skilled financial analyst with strong expertise in analysis, forecasting, and strategic planning. I aim to take on greater responsibilities, contribute to high-level decision-making, and mentor junior team members. Continuous learning and professional development are important to me. My long-term goal is to add consistent value to the organization while growing into a trusted finance professional. Junior financial analyst interviews focus on analytical ability, accuracy, communication, and adaptability. Preparing consistent, well-structured answers demonstrates professionalism and readiness for the role. Emphasizing financial fundamentals, teamwork, and continuous learning strengthens your candidacy. With strong preparation and confidence, you can present yourself as a reliable and capable financial professional ready to support informed business decisions and long-term organizational success.